Here is your final set of homework. Your next task then would be to prepare for your quiz, and you'll have a tutorial to help you prepare for that quiz, sort of direct you to which questions you need to review to do well on your quiz. But anyway, here we are with Chapter 1, Set 3. Question 1, accounts payable appear on which of the following statements? You remember that the balance sheet restates the accounting equation, and accounts payable as a liability is part of that equation. So the first answer here is balance sheet. Let's put that in there. Next question, we're going to determine equity using this listing of categories. Okay, so you can see we've got 3 asset categories that we start right off with. Cash, buildings, equipment. Let's kind of highlight those for you right here. Sorry, that's pretty sloppy. And then followed by liabilities. Those three add up to something like, oh gosh, something like 438, I believe 438,000 is what your assets total. If we subtract your liabilities from that, here it is right here, we get 297,000. There's your equity. Sorry about the sloppy writing. So let's look for 297,000. Next question. Here we have beginning equity at the start of the accounting period. Remember that our business can be divided into time periods for accounting purposes. And at the beginning of that period, this particular company has beginning equity. Remember, equity is the owner's right to the assets of the business, the owner's interest in the business. So let's start with that beginning equity, which is 257,000. Okay. We had a net income of 51,000. You remember that income increases equity, so we're going to add that in there, another 51,000. Withdrawals of 40,000. Okay, so we'll subtract the withdrawals. Owner took some money out of the business for his own use, and then we have some investment by the owner. That's a plus of 6,000. Okay. If we net those numbers out, we should get to 274,000. I don't see that number on the screen, but let's scroll down and see if we can find 274,000. This next question has to do with cash flow. You remember you have a cash flow statement that will keep track of how you're using your cash. So cash comes from three basic categories of activities: from operations of your business, from investing, and from financing. We want to know the net change in cash, okay? So we had an inflow, a plus of 60,500. And then we had an outflow, a reduction of 47,000. We'll put that in parentheses for you. And then an inflow of 25,000. That's another plus. What we want to do there is net those numbers out. And if you add and subtract, you'll find out you have a net positive balance of 38,500. This question, here we have a situation where a company Saddleback company actually pays off one of its liability. Accounts payable, remember, accounts payable is for short-term debt. Usually no more than 30-day terms. So this company, Saddleback company, pays off that accounts payable, takes some cash, writes a check, reduces cash by 30,000, and reduces liabilities for 30,000. Okay, so assets decrease, liabilities decrease. The second response is what you want there. Number 6, here we've got Houston Company. They've done some consulting work, and so they bill this particular client for $10,000, okay? They bill them. That means they didn't get paid off. They have the client's promise to pay that debt, and we show that promise as an account receivable. So that asset account receivable increases by 10,000, okay, increases by 10,000. What else happened here? Well, they did some work, and so they had some sales. We'll call it revenue. The other part of that transaction, revenue, increases 10,000. Number 7, well, this company has equity of 145,000 at the start of the year, and as the year's progressing, they add income. At the end of the accounting period, they have experienced 210,000 in revenue and 165,000 in expense. That difference between revenue and expense is your income. So let's add the revenue and subtract the expense. Here it is right here, 165,000. Put that in parentheses to show you that it's going out. And that's it. They also have liabilities of 1 92, or rather just 92. Liabilities at the end of the year, 92,000. Okay? So their equity with these changes finishes up the year at 190,000. There's your ending equity. Let's label it for you. Sorry about the sloppy writing. That plus your liabilities. Liabilities again are 92,000. Have to be equal to your assets, okay? So equity and liabilities on the right-hand side of your equation have to be equal to the left side. We'll combine these two numbers. They add up to 282,000. There's your asset. Then we've got this Lido company. We have inflows from operations of 27,000. So let's keep track of what's going in and out of their cash account. $27,000 goes in. That's from operations, the day-to-day operation of the business. Then they do some investing. That's an outflow, so we'll have to subtract that, 22,000. And then another outflow of 12,000. We'll net those numbers out. They net to 7,000. That's an increase, or rather a decrease of 7,000. Okay, let me go back over that because it wasn't very clear for you. They start off with an inflow, an increase in cash from the day-to-day operation, 27,000. They do some investing and lose 22,000. There it is going out. And then they do some financing, which costs them another 12,000. We net those numbers out. They net to a negative 7,000. So we have an outflow, total outflow of cash, 7,000. That's the third option down. Number 9, this is just a definition of revenue. Revenues are what? Increases in equity, right? Remember, revenue is a part of income. Income increases equity, so revenues increase equity. Income is revenue minus expense, of course. So we're looking for an increase in equity from whatever our business is about. Maybe we're selling a product, maybe we're providing a service, but anyway, we increase equity from a company's sales of a product or a service. And that's going to be the fourth one down. Number 10 shows you a negative outcome when your expenses are greater than your revenue. Remember, income is revenue minus expense. Revenue is greater than expense, and you have income. But if your expenses are greater than your revenues, you're in the red, so to speak, and you have a net loss. And so that would be the third one down. Again, at this point, you've finished off all of your homework. You want to be preparing for your quiz. Look for a tutorial in regard to Chapter 1 quiz.